Hi, welcome to the Commercial Gas Engineer channel. I want to share with you something which isn't the typical commercial video, but this one is about how to go about investing your hard-earned money as an engineer, working with your hands, into getting your hard-earned income to work for you. So I'm not a financial advisor, but I do have a side hustle of investing and I've been successful at it. So want to share it with you. In my description, I do say that I aim to share with you as much as I feel could be useful. So I'm going to share with you in this, if you so choose to listen, how I go about investing. So I have made a video on this in the past. It's called Why Are Plumbers Poor or something of that nature. But in this video, an unedited video, uncut, I'm going to just basically spend the next 5 minutes or so telling you how to invest in the stock market. So forgive me if there's any errors in this video. I'm not cutting it at all. So bear with me. So first things first, I'm going to also put in the description the steps that you should try to follow. But remember, do your own due diligence. This is taking me a good 4 years to master and I'm still learning, but I'm winning. So for now, so I'm going to basically put in a description and in the comments the step-by-step procedure, and you can take and do what you like with it. It's up to you. So first things first, what is the first thing that one does, what I do, if I'm looking to buy a small portion of a company? The first thing, remember, this is long-term investing. This isn't day trading. This isn't any other form of crazy investing, but investing in reliable companies. But read the description below to find out more of what I'm talking about. I don't want to go into too much detail in this short video. 2 minutes have gone already. So first of all, Finviz. I go into this website and then I put in the categories of the companies that I am looking for. So the type of companies, what criteria they meet. So you can see it here. There's a greater description of this in the comments and so on, or in the description. So here we go. I've put in what I expect a company to do, net profit and so on. And this shows me that if I don't put any details in, it will just show me every company available in the stock market. So this is giving me a few companies here. So that have come up to the criteria. I could hit the button here that says change at the bottom right. And then it will say, it will show me basically the company which has gained or lost the most. I could also do market cap, but I've put different categories here. All right, and now once I've got my companies that have ticked some of the boxes for me, I have one or two of these companies here. I don't have all of them. I've had some of them, I've lost them, but not all of them would meet necessarily the right criteria. Next page now. So the next thing, I will go to the app or the website, Simply Wall Street. An amazing app. You do not have to subscribe to it, but you can simply use it, but just don't click too much. I've put more details about this as well in the description. So I would put a company like Google, for example, a company that I have bought shares in over the last few years from the lockdown period till now. And I've gone through the details as well in the description of the valuation, what it means, the future growth, etc. And to add up all these numbers and to look at the rewards and the risks and to do a calculation, which I've also come up with in order to shortlist companies. Is it a perfect calculation? No, but it can help you understand and weigh up the risk, the pros and the cons about a company. So read in the description below or the comments about this. Next, so I've got Alphabet. Make sure you got the right ticker symbol here, okay? Because you can get there's other shares of there's other formats, there's other ticker symbols for Google. They have got other offerings out there that you can get. So when you have the company, make sure you have the right exact company that you're looking for, because you can get confused. Some share the same ticker symbol. That's the GOOGL. You'd call that the ticker symbol. Then here you'd go through the details now in Simply Wall Street about the company, read about it. And then once you've got the company and you got a list of all the companies together and you stack them up, you get your shortlist of your best companies for that time of the year, that month, that day, that week. You get all them together now, whether it's a sector you would like to invest in. It might be a dying sector. It might be a winning sector. So just be careful what sector you're in, because, for instance, some people aren't investing so much in oil or gas or things of that nature at the moment because they're trying to move towards renewable energies, unless there's a company that's going that way or it's the right price, etc., etc. Ooh, Okay, remember, I'm not cutting this video. There's no editing in my speech. You're just going to get everything raw, my mistakes, everything. Cutting takes a lot of time. And I believe that there's a lot to be gained from this video. All right, next. Here now, I'm in Yahoo Finance, and another amazing free app. Okay, go into Yahoo Finance and you can make use of it. This is a list, just a little preview of some of the companies that I have in my portfolio here. The top one is just the S&P 500, whether it's going up and down, I keep an eye on that. And then the rest are some of the companies that I have shares in. Okay, I'm not telling you to buy these companies. I'm just telling you that they're just a few that I have bought or I'm watching and so on. So you keep them here, and then so it's a good place to have them listed. And then you can do things like set price alerts on them. And then when you select the price alert, you'll have the price alert here where when it reaches a certain price, it will alert you. So instead of you rushing in and buying at the wrong price, you can put a price target that you're looking for. Here now, this is like the notifications in Yahoo Finance. And then here is, for instance, like the price of, in the summary page of Apple's movement. So check to see, have they dropped? You want to buy companies, solid companies with good balance sheets at the right time when they're having a bad month or two, etc. That's when you go in and get them. You don't get them when they're at all-time high. Aim to buy the dip. But buy the dip of companies that can't be held down for too long. Some companies could just keep breaking through that support barrier. Yeah, there may be a support barrier, for example, and the company may just fall through it. There's no guarantee that it's not going to keep dropping. It's like trying to catch a falling knife. But basically, you need to do your own due diligence and decide, this looks like this company is going to go up at some point and I would like to buy it for this price. Okay, moving on. This video is taking longer than I expected, so it may take about 10 minutes or more. Now, if I told you everything that was the little bit of matter that was bobbing around in my head about investing, I could be here for a while. But remember, do your own due diligence. So now this is 5 years for Google or Alphabet. That's what they were called. This is their percentage. They've gone up over the last few years, the last 5 years. So that gives you an indication of what you can gain if you hold something for 5 to 10 years at the right price. Okay. So then now this is showing me the range, the days range or the 52-week range. This was a print screen of this morning of what I found. So it would have changed by now. You can see the time here. It says 7:49 when I print screen this. I started this video early for you this morning at about 5 a.m. and it took me about 2 hours just to print screen all this information and to write something for you to read. Sort of a disclaimer and also more information about how to invest safely. Okay. So this is key statistics and summaries of, you can get more information here and find out, just Google some things here, like what does PE ratio, price to earnings ratio, what does market cap mean, what does beta mean or beta. I forget what some of these things mean, but I just try to remember the most key bits of information I need. But you don't need to know every single detail sometimes, you just need to know some very key factors because some way heavier than others. Then here you can see the price alert, set price alert, and you can click there, latest news, read through the latest news. It's all for you to understand. Analyst recommendations. So the analyst will tell you, I think you should buy this. I think you should sell. You shouldn't go all by what they say. Once you start getting good enough at understanding balance sheets and so on, you don't need to hear too much what they've got to say, but you want to know if a company is popular or not, because that you want people to be buying the company you're buying as well. So it pushes the price up. Okay, then you can see analyst price target here at the bottom. And then this is also the analyst. So if you click on the recommendation trends here, it will tell you in August, 13 analysts said it's a strong buy at the moment. 25, you got 25 number of analysts said it's a buy, and some just said it's just a hold, others, etc. And then there's the sustainability. This is the controversy level of the company at that period of time. And then what else do you have here? You can click that sustainability and it tells you other things like the risk and so on factor. I only found this today. There's so many details you can find. I only found it today making this video for you. Then the next page now shows you the earnings per share. Okay, so that's here, and that's very important. Okay, the earnings per share, and also the revenue and earnings. That's also very important. Just Google, what does revenue mean? What does earnings mean? I can't tell you everything. Okay, I can tell you some things, but I can't spend this whole video telling everything. But do feel free to ask me questions, but I think you should do your own homework. here is, for instance, Google's increase. It's good to find a company that every year they are going up. They're not plateauing. They're not the same revenue. They're going up each year. Somehow this company keeps printing money. Maybe it's from all these YouTube videos and so on that they're getting people to make. They're making money off of it, but they're making their money from knowing information, etc., etc. Google knows, so they're making more money. And then you have the earnings here. Can you see the earnings? The earnings is there. It's not really necessarily going up, but they've got earnings there. They've got profit. And then here you've got the earnings per share, and then that's their target. Are they going to beat? Are they going to miss, etc.? That's very important. And then you should know every 3 months that companies usually do an earnings report. Check that out, because the time when you buy a company, if you buy just before, just after, can have a huge impact. Then get more financial information from watching. Be careful with YouTube channels, mine included. Some because what I said in one of my disclaimers sort of is that people can find it hard. It's difficult when you don't know something. It can be hard, but it can be very difficult for people to discern and weigh up what is good information and what's bad. There's some YouTube videos that are out there that if you had to put a price on them, they're probably, you could say this is worth £5,000 to my life, these videos. And some are worth nothing. They're minus. I've watched videos that have lost me money. But I believe that Everything Money is an amazing channel which has good information, especially on finding the right price for a company, so estimating the right price, and then also the 8 pillars that they go through, so understanding the pillars of a company's financial. So if you don't know much about the market, it's good to see this and see, for instance, they make videos on large cap companies like Google, so it's good to hear what they say, but take it with a pinch of salt. This is also the investor channel who goes through the balance sheet and so on. But for me, it's not as good as Everything Money, but it's still very good. And it's good to have something to compare different opinions. But be careful on finding people that say, this is the best thing to buy right now. It's amazing. And it's all pros, no cons. This is the best thing to buy. Buy. Be careful of that. You need to hear negatives. And then once you've heard the pros and the cons, then you can weigh up.